Hi, Greg Dorsey here. It's Tuesday, February 22nd at Leeb.com, Leeb.com. Hey, be sure to sign up for our free newsletter if you haven't done so already. Well, today stocks around the world got slammed following reports of widespread bloodshed in Libya and disruptions in that country's oil production. Brent crude prices gained another 3% to close above $106 a barrel. A major concern is that the unrest will spread to Saudi Arabia, which would cause oil prices to shoot much higher. We don't think it'll come to that, however. At the end of the day, U.S. stocks, they shed about 2%. Interestingly, the Saudi stock market was down only 0.3% today, and it's only down 7.5% from its January highs. In other words, the market there isn't too concerned about the unrest spreading. We can't help but wonder how much of today's selling, and by that I mean here in the United States, was caused by good news rather than bad. Consider that the Conference Board's U.S. Consumer Confidence Report, which came out at 70.4, well ahead of expectations at 64.5, and up from 60.6 a month ago. Also out today, the Richmond Fed's manufacturing index for February jumped to 25 when analysts were expecting it to stay flat at around 18. These kind of readings, coupled with other data that show an improving economy, will give the Federal Reserve less cover to hide behind with continuing with its quantitative easing. Stocks have staged one of the greatest rallies on record since the Fed began this money printing policy. And should it take away the proverbial punch bowl, well, investors would certainly have less to cheer about. Of course, a stronger economy is good for corporate profits. The bottom line, stocks were trading about 15% above their 200-day moving average heading into today, and we're looking for an excuse to correct. But while shares are likely to remain volatile in the near term, what we're witnessing is likely nothing more than a much-needed correction, not the start of a major pullback. Well, that's it for me. Stop by again soon. We'll have plenty more for you.